What's up, YouTube? So this video is for every single person who want to start trading forex, that you call it forex or crypto or stock market, or somebody who just started or you just want to start. I want to tell you the things that you need to focus on, the things that you need to learn for you to be profitable, for you to be successful as a trader. Okay, so I want you to watch this video to the end because I will be revealing so many secrets that majority of people out there don't usually talk about. So let's start with it. So the first thing that I would like you to understand here is the fact that there are basically four key things that you need to master, that you need to understand. Four. The first one has to do with how you analyze the market. There are two ways in which you can analyze the market. The first one is fundamental. The second one is technical. Okay, so let's start with the fundamental aspect of how you do fundamental analysis. Now, you might have seen a lot of video on fundamental analysis, or you might have seen a lot of gurus or so-called gurus in trading that talks about checking high impact news. Okay, they will tell you to go to Forex Factory and then you check high impact news. And the funny thing is that even the high impact news, the data that comes out during the high impact news, majority of them even read it wrong. What they just look out for is if the data that comes out is red. If it is red, they believe that is a bearish signal for the asset. If it is blue, they believe it is bullish signal for the asset. But that is not the case. Okay, that is not the case. And sometimes the data that comes out may not be good, but it will be better than the previous data. Okay, let's say for example now, let's say CPI came out last, let's say previously CPI was, let's say, 0.4%. Let's say it's 0.4%, right? And then CPI came out now and it is 0.3% and it's still red. Okay, and it's still red. It was red previously and it was red. It's still red now. Okay, but you will discover that the previous data was higher compared to present data. Okay, which means that the data or the news or the economy data, that particular CPI data that came out, is better than the previous, which means that the economy or the asset is getting better. That is positive. The fact that it is red doesn't mean that it is positive. It is bearish for the market. So now the first thing I want to, basically what I'm trying to tell you is that you don't just look at high impact news. You look at the meaning of the data that comes out. The data that comes out, is it going to help boost that particular asset in the long run, or is it going to affect the market in the in the long run? So that is how you want to. It's not that you just want to look at the data immediately and then jump into the market. You want to understand what the data means for that particular asset. Okay, for example, CPI data, when it comes out, does that mean that there is an inflation in the, because CPI is used to consumer price index is used to measure inflation. So the idea is this: if this data now comes out, okay, does it signify that there is inflation in that particular country? Let's say US inflation CPI data comes out. Does that mean that there is inflation in US? Does that mean there is no inflation in US? That is the interpretation that you want to read into it. Okay, and you want to also understand what other investors are, their sentiment based on that data. That is what you want to understand before you go into the before you take any trade related to maybe US stocks or even US dollar. Okay, that is if you are trading currency pairs. So that is the first thing you need to understand. You need to learn to use to understand data, not just look at time patterns and trade. Not only that, when it comes to fundamental analysis, you do not just want to rely on just checking high. You also want to learn to read news and understand the sentiment in the market. Okay, let's say for example you want to trade gold. You want to understand, like right now you want to understand, let's say I'm using this period as an example now. For gold is bullish. Why is the sentiment in gold bullish? Because it is, first of all, it's a safe haven asset, and the US stock has been going down. The economy, there is tariff plans that are discussing what, so many issues that makes equity market unstable, and because of that, investors are putting their money in safe haven assets like gold. That is a bullish sentiment for gold. So when you understand something like that, that is when you want to be looking for buy opportunity. You too, you want to be buying into that momentum. Okay, so if you look at gold now, it's rallying seriously, and even me myself, I made a lot of money from it. So you want to make sure you understand fundamental and use it the right way. If you want to actually understand this concept very well, it will be wise if you consider taking my mentorship class. Actually, I don't usually compel people, but I just feel that it is necessary for us to get the knowledge first before we can do all these things. So if you feel like taking my mentorship class, just check the link in my bio. You will see my Telegram link there. Just send me a DM. Then I will hook you up. Then you can understand how to do all these things properly and trade like the professionals. You know, just trade like as if you are playing gamble. So that is for fundamental. The second thing that you need to understand how to trade is technical. Okay. Now, on the technical basis, to me, I give, when it comes to fundamental and technical, if I want to rate the best or the most powerful that influence the market the most, I will say fundamental and market sentiment. So I will give fundamental and market sentiment 70%. I will give technical 30%. Technical is just the reflection of what is going on in the back end, based on sentiment of the investors, fundamentals, and all those kind of things, and how it affects the market. So so technical, all you just have to do is to make sure that whenever you are buying, for example, in the case of gold, now let's say you want to buy, you want to be looking for retracement down to particularly maybe to a support zone, then you buy. And sometimes you don't even need to get to a support zone. Maybe when the market retraces, it hasn't gone to a support zone, but it has given you some kind of reverse head and shoulder pattern or double bottom, then you want to jump into the trade. Okay, you want to jump into the trade. Sometimes if you want to be aggressive, you don't even need, as soon as you see the retracement, even if it hasn't gotten to a support level, but it has already started showing some kind of weak rejection like a pin bar or some kind of bullish engulfing candle, at some point you want to try and take the trade. The reason being that it is not, market is mostly influenced by fundamental, the investor sentiment, all those kind of things. That is what influence the market decision. Okay, so technical is second thing that I want you to master. You need to understand how to mark your support resistance, how to identify the trend, and price action pattern like double top, double bottoms, reverse head and shoulder pattern, reverse head and shoulder pattern, and reverse head and shoulder pattern. Then you want to understand triple top, triple bottoms. These are the things that you want to understand. Okay, so the third most important thing is risk management. Okay, so I have seen people who take trades and you know, it depends on taking, when it comes to risk management, there are so many things to understand. First of all, which broker are you using determines, the broker you are using determines the risk that you are supposed to be using. Not only that, the asset that you are trading, is it stocks market, is it S&P 500, is it Nasdaq, is it US 30, is it gold, is it currency pair, JPY, is it US? They are different. The lot size you use for each of these assets are different, so you need to understand. Okay, and then the risk that you expose yourself to, you need to factor in the total capital you have in your account balance before you start risking certain amount of your money. If you are, let's say you are trading with $50, you should be considering maybe risking $5 out of for let's say you are risking $10 from that account. That $10, make sure that you spread the $10 out. Like you don't take gold and use risk $10 on gold immediately. Okay, you take, let's say for example now S&P 500, you risk $5, then maybe you look for another asset entirely that is not even US indices entirely, and you risk another $5. Like you diversify your portfolio so that you know that if this doesn't work out, there is possibility that the other one will work out. Okay, and then you want to be making sure that your risk to reward ratio is very high, like your risk is smaller than your rewards, like 1:2, 1:3, 1:5, 1:6, 1:7. Okay, so many things that you need to understand. Okay, these are the things that you need to understand. Risk management, you need to understand that. Okay, like I said, if you want to understand this, consider taking, like, if you want to proper education on this, you may want to consider taking my mentorship class. And if you don't want to do that, you can just subscribe to this channel. I talk about these things one after the other. Most of my previous videos are on this particular topic, so you may want to check them out. So subscribe and like the video. Okay, so the last one is psychology. Okay, psychology. So what do I mean by psychology? You want to learn to deal with your emotion. Okay, you want to learn to deal with your emotion. How do you feel when you are winning? Okay, you don't let that get into your head when you are, let's say you keep having consistent winnings. You don't want it to get into your head and then start taking trade recklessly and start increasing your loss size on irresponsibly. Okay, and then when you are losing, how do you deal with your emotion? Do you try to understand the cause of your losses, or you are just desperate to make back the money that you've just lost? Okay, these are the things you do not want to. That is what we call revenge trading. When you lost money and you are just being stubborn, you are just trying hard to make sure you get back the losses, then you may just start getting deeper into more losses and all that. That is revenge trading. Is not good. So when you are losing, you want to take a step back and understand what is going on, and then wait for a better opportunity based on your system, your strategy, and then take another trade. Okay, if you take two trade and you lose, it is normal to lose. Okay, in every business at some point you don't make profit. But in trading, you may lose the first time, you may lose the second time, but the third time might be a win trade. And when it's a win trade and you are your risk to reward ratio is high, then definitely you are going to make back all those previous losses, and you are still going to make profit from it. So you don't beat yourself too much over some losses. Just take it and then understand why you undergo that losses, and then fix it if it is possible. If it is not possible, just avoid the mistake completely. Okay, so that aside, okay, that being said, uh okay, psychology. How do you feel when you are losing? Okay, so so many things about psychology. One of the things that happen is one of the issues that used to happen when it comes that has to do with psychology is fear of missing out. Okay, fear of missing out. When you see the market going and you be like, oh, maybe gold is buying, and you see that green big candle and you be like, oh, let me jump in. No, when you see the market already buying and going like that, you just want to relax and wait for the market to retrace back, and then you take your entry. You don't jump into the trade. Okay, so basically that is what I want to show you in this video. I believe the video is helpful. If you have any question whatsoever, just drop it in the comment section. I will attend to it. I will reply and give you my best answer. So see you in my next video. Thanks and bye for now.